bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan Akasaka Palace in Tokyo, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with the close. Weekdays on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is the NFTs not covered in the same way that some Bitcoin has?
Bloomberg is covering all things crypto.
It's a very spectacular story.
This is the future. This is the 21st century economy.
The transaction
It snapped up nearly $1 billion in Bitcoin.
Good morning and happy Friday. We got some PPI high impact this morning at 8:30. Inflation was a little higher. Markets open range bound and we're below POC and there's a massive gap from yesterday. So I don't know if they're looking to, if we can get below this value area, we could come back down. Let's see now. Gap here. We can get back above this POC. We can this POC above here. We can maybe try back to fill this gap, or it's so far away that probably won't happen till the new week.
And unrelated, I currently have 850 streak on Duolingo.
Are you actually learning anything? What language are you trying to learn?
I'm doing Spanish. I have high school only present tense level Spanish, so I'm hoping at least it helps you remember, I don't know, vocab. Jury's out whether it's actually helping me or not.
Maybe I'll give it a shot. My wife is from Spain, and we've been together for like 13 years.
I feel like it's embarrassing that you go to Duolingo to learn Spanish and not your own way.
I mean, she thinks it's embarrassing that I don't speak Spanish.
I got it.
The Pentagon is open to more talks with Anthropic ahead of today's deadline to ease restrictions. Bloomberg spoke with Emil Michael, U.S. Undersecretary of Defense for Research and Engineering, about the negotiations.
There's a divergence between ES and NQ now. ES has failed to take this high. NQ's already taken it, so NQ looks a lot stronger right now.
Joining us now is Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh. And Mandeep, I read the Anthropic statement yesterday, and it seems like the two things Anthropic isn't willing to do is let the government use AI to do surveillance on its own people, on us, and let the government use AI to autonomously control weaponry. Surely the government doesn't want to do either one of those things, right? That would be insane.
I would agree with that. And look, I think with Anthropic, because they've been so focused on guardrails from the get-go, for the CEO, this is probably one of his big things that he has highlighted as a differentiator. And he doesn't want to completely, give up on that guardrail aspect, even though, the entity here that is looking to use that is the U.S. government, and their point is around national security. So from that perspective, I mean, I go back in time, what the other software companies have done. And, you always have to have the government on your side, and especially when it comes to national security. So it's going to be hard for someone like Anthropic to maintain their stand, at least as is they have right now.
I mean, have you seen Terminator? We've all seen Terminator, right?
Yeah.
That's the whole premise, that AI controls weaponry, and is it not?
No, it is. But also, indeed, doesn't Anthropic, two thoughts on this. One, doesn't this sort of cement how great of a foundational model Anthropic is if the Pentagon has to keep being like, okay, we're open to talks to work with you. It seems like they need Anthropic. And number two, given the doomsday scenario Matt is laying out, don't you think this would be bad for their image if they caved to the Pentagon?
Not really. I mean, you have to think in terms of geopolitical context and, the competition that I guess we have with China. And then again, the national security aspect of it is huge. So, Anthropic is in a dominant position. Like you said, they are among the three leading foundational model players right now. And the government is key to use their product for intelligence. So, at this point, you have to think about who your end user is. If it was any enterprise use case, I totally understand. But if it's the government and they're talking about it from a defense standpoint, again, it's hard to argue, why you would not relent in that case. And I mean, clearly, Dario has his points around that. And I'm guessing this will have some sort of a negotiation phase, and obviously they will probably come to some sort of agreement.
Yeah, I thought it was encouraging that Emil Michael said we're open to continue talks.
Yes, and again, it just shows how dominant Anthropic is. Maybe thank you so much, Maybe saying of Bloomberg Intelligence. Coming up, how ETFs can provide an escape hatch for distress in private credit. By the way, the latest headline, MFS creditors alleging that there was $930 million in a shortfall from double pledges. The fraud saga continues. That's next. This is Bloomberg Open Interest.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Trade day is about to start.
You're already looking for that day.
The Open Trade brings you everything you need to know as markets open across Europe. I'm Dirk Jones.
I'm on edits.
And I'm Tom Kent. This is your opening trade.
Okay, just taking out break even.
And wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this really normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francie Blackwell, and this is The Pulse, on the weekday only on Bloomberg.
Join me each week on Wall Street Week for stories of
Yeah, still weak here.
markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Open Interest. I'm Matt Miller. Happy Friday. Or not, if you're long stocks right now. The S&P 500 is down 9/10 of 1%. The NASDAQ down 3/4 of 1%. So some big drops here across the board. Small caps off 2% as KPI comes in hotter than expected. Also, Nvidia is down right now, so 2.5% drop in that big behemoth doesn't help at all. Block, which is not a big behemoth, is up a lot, 14, almost 15% right now after Jack Dorsey said he's going to fire half the staff, replace them with AI, and that means they're going to make more money this year. That's what shareholders like to hear. Netflix right now almost 10%, so gaining a 10 after they said, you know what, we're out. We don't need Warner Brothers Discovery. We'll just take a $2.8 billion breakup fee and go our merry way. Paramount is up because they are going to get, it looks like, Warner Brothers Discovery, so getting 4% there. And then, the private credit story that Danny has been covering so well continues to see fallout with a lot of marks disappointing the markets. Apollo right now down 7%, Blue Owl down another 5%.
And just adding to the stress this morning, the latest breaking news that MFX, that fund, or rather the creditor that was in the UK that seems to be now the cockroach, apparently 930 million pounds, about $1.2 billion worth of double pledges, so concerns about fraud. Now, this is not a fraud story at all. It's very different, but Blue Owl, as you were pointing out, Matt, continues to follow its move to restrict withdrawals, exposes enduring tension between liquidity expectations and illiquid assets. Investors lost control of redemption timing, with the ETF wrapper offers an escape hatch, according to Bloomberg Intelligence, during this announcement secret of Bloomberg Intelligence. So, James, there's been this real big anxiety around BDCs and the liquidity profile of them. What do you admit to mean by the ETFs offering an escape hatch?
Yeah, so there's a huge push right now to put private assets into an ETF wrapper. There's people trying to do it with private equity. There's a huge push to do it with private credit, which is very relevant to what you're just talking about with Blue Owl. And you're probably going to think that I'm going to sit here and say it should just all be an ETF wrapper, but that's really not the case. What we're saying is there's trade-offs to however you do this. If you're going to do it in an interval fund like that Blue Owl fund you were just talking about, you're going to be locked up potentially for much longer than you might want to be. But that's kind of what you're doing when you're investing in a liquid asset. You're buying a private credit fund or a private equity fund, you name it. Like in some cases, you're locked up for 10 years no matter what. These assets are illiquid. But there are examples of ETFs that go completely illiquid and you can still trade them. The question is, would you rather be able to get out at a potentially massive haircut, a huge discount, or would you rather be forced to be stuck in there? So these are all trade-offs that you make, but ETF does have a lot of benefits, and there's a few examples we've looked at in history that show us those benefits. James, unfortunately, we're running up against the clock. But I'm looking forward to more coverage of this on ETF IQ. Monday, James Safert there of Bloomberg Intelligence makes up like our ETF triumvirate on the BI side, right? We've got Eric Dalchunas, Afanasio Serafigas, and James covering it there. And then, of course, on Bloomberg TV, ETF IQ, you've got Dalchunas, joining Katie Greifeld and Charlotte Fu. That is a must-watch hour of television, now a full hour of television.
Yes.
Every Monday if you're into ETFs, as pretty much everyone is. It's like the most important wrapper in the investment world.
It's a great show, and we have another hour coming up for you here on Open Interest. The CEO of Monroe Capital is going to talk about private credit fears. We're going to talk about algorithm. Remember that little karaoke company that pivoted to AI and sends an entire trucking sector plunging? We'll also speak with Gary Atkinson, the CEO of Algorithm. All that in your hour 2 of Open Interest.
When you look at the Korea, the pivotal moment was actually that meeting with Robert De Niro. It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decades.
You know, I met him 1988 after my bachelor's was open. He asked me to come to the University of the World, and I didn't know what he did.
You didn't know who was that?
No, I don't know what he did, because I never watched the movies. I was traveling the disease. But of course, after people had nobody, so he must know it, and then I understand.
How is he as a partner?
He's for me and a great partner. He understands to my concept. He supports me 100%. But also he's a very smart people. Sometimes so strange idea, but it's good idea. So for example, Nomo Hotels idea come from him. He said, hey Nomo, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start to do hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the region.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at criminal speed. Nobody covers jobs data like Bloomberg.
This is CBS News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. Scouting America has just announced it's altering its policies to maintain funding from the U.S. military. Focuses on transgender hopefuls.
Defense Secretary Pete Hegseth says the Boy Scouts had lost their way and become woke.
Diversity, equity, inclusion, DEI. The name was changed to Scouting America. Girls were accepted.
Now the organization has agreed to drop DEI and alter its membership policy.
Membership will be based solely on biological sex at birth and not gender identity.
Hegseth says he will review the changes in 6 months and decide if the military should continue to support Scouting America. Michael Wallace, CBS News.
Former President Bill Clinton will face tough, perhaps embarrassing questions when his congressional deposition begins next hour in New York on his ties to a convicted sex offender. CBS's Katrina Kaufman.
He does appear in the Epstein files. There was an image of him in a hot tub with an unidentified woman. You see him swimming in a pool with Ghislaine Maxwell.
Mr. Clinton will become the first former president in more than 50 years to testify before Congress. His wife, former Secretary of State Hillary Clinton, was deposed for 6 hours yesterday. With the largest aircraft carrier in the world, the USS Gerald R. Ford, set to arrive off the coast of northern Israel, and both the U.S. and Iran prepping for the possibility of war, some Americans have been given the green light to leave the Middle East. CBS's Charlotte Daga is in Tel Aviv.
Today, the U.S. Embassy here in Israel issued a security alert and a new advisory authorizing the departure of, quote, non-emergency U.S. government personnel and family members to leave the country due to safety risks.
AI is robbing humans of more jobs. CBS's Jim Krasula.
Block, the company founded by Jack Dorsey that includes Square and Cash App, plans to lay off more than 4,000 workers, 40% of its workforce. Dorsey, who co-founded Twitter, alluded to artificial intelligence tools as the reason for the cuts. He wrote in a letter to shareholders that AI tools have radically changed how to run a company.
Now to the sex lives of our ancient ancestors. A new study in the journal Science finds Neanderthal men and Homo sapien women were getting cozy back in the day. As for who was pursuing who, study author Alexander Platt at UPenn.
There's been a preference for male Neanderthals and female non-humans as opposed to the other way around.
His team determined most of us alive today carry a little bit of that Neanderthal DNA. The Dow's down 800 points. This is CBS. Pokemon is turning 30.
In 1996, we were introduced to the world of pocket monsters like Pikachu and Charizard. What began as two simple Game Boy cartridges sparked a global craze. Since then, the franchise has sold more than 350 million video games and 30 billion trading cards worldwide. 3 decades later, Pokemon still has fans everywhere trying to catch them all. Stacey Lynn, CBS News.
First reviews are in on Bruno Mars' first new album in 10 years. USA Today calls the romantic efficient, impeccably produced, lyrically slight, but brimming with the musician's innate ability with melody. Mars kicks off a world tour in April in Las Vegas. Deborah Rodriguez.
This is Bloomberg Intelligence with Scarlett Brew and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
Lots of investors getting whips on every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Brew and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube as well. We're also streaming now on Bloomberg.com/video. That's where you'll find us there. Isabel Lee sitting in for Scarlett Food here today. A lot coming up. Markets are selling off pretty hard here today. Coming up, we're going to check out Geetha Ranganathan. Netflix pulling out of the deal for Warner Brothers Discovery. So we'll check in with Geetha. She's the media analyst at BI. Good news, I think, for Netflix shareholders. That stock was trading higher earlier. Caroline Hyde, she is the co-host of VTech. Get the latest on what's happening in the world of technology. Anthropic rejects the latest Pentagon offer, escalating AI futures. So what's going on there? Nadia Lavelle, senior U.S. equity strategist at Global Wealth Management at UBS. We'll get your thoughts on these markets. Would you know? Senior technology analyst for Bloomberg Intelligence. We're talking about Dell Technologies. They're going to report some results here and see what's happening in the world of PCs and in AI as well. So a lot coming up here in a market that is selling off here today pretty substantially here. We're going to go to John Tucker at Bloomberg. This is
Markets and Splash brought to you by IBKR. 2025 IBKR retail clients averaged a 19.2% return, beating the S&P 500 17.9%. The broker you choose matters. Visit IBKR.com/2025. Well, the S&P 500 right now closed for the worst month since March. So what are we worried about at this sell-off today? Take your pick. There are new worries over an AI bubble, new credit blow-up, as Market Financial Solutions collapsing in London, and then U.S. producer prices rising more than expected. Elsewhere, OpenAI has raised $110 billion in a deal that values the startup at $730 billion. Right now, consumer staples, the best performing major industry group in the S&P 500, information technology and financials, they are the worst performers right now. Meantime, we talked to Chris Barone, chief market strategist at Strategic Research Partners, says markets are in a trend right now that will define the years to come.
I think this is a transition, and our call has been a transition from kind of speculative flowing into the market to the real economy or the old economy. I think that's well underway. It's ongoing, and I would expect it to continue to reflect.
Going at the S&P 500, 45 points lower, 68.63 on the index, down at 0.7%. The Nasdaq 113 points lower, that's down 0.5%, and the Dow Jones Industrial Average 658 points lower, that is down 1.3%. Well, you know, Elon Musk is already the richest dude on Earth, but a successful SpaceX IPO could make him the world's first trillionaire with a T. Let's try to conceptualize that, everybody. That's as many dollars as there have been minutes since the dawn of the Ice Age. So,
What is next after trillionaire?
there's a billion. I don't know. We check the markets. You can't get. You gonna go higher than that? We check the markets view all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Isabel and Paul.
Very good, John Tucker. Thank you so much. We appreciate that. Isabel is sitting in for Scarlett. Put on Fox when you like her. Bloomberg Bloomberg Studio. Streaming the video thing live on YouTube and on Bloomberg.com. Here, let's take a look at some of the stocks on the move today. You can do that with Bloomberg's Tatiana Derry. Tatiana, what are you looking at?
We'll start with Corey, a notable mover to the downside today, falling as much as 19% at the open, the lowest only since August of last year, but still a big move there. The AI infrastructure company reported a bigger than expected loss while boosting its capital expenditures. So that's reviving some of those capex concern in the market. Sales rose to 1.6 billion compared to 1.55 that the analysts were expecting, so at least some relief there, but the market does not want to see this capital expenditures plans rising, and Corey is the latest victim here to the market's worry.
Yeah, definitely. What about Dell? Shares are in the green, jumping.
Yeah, Dell is doing the exact opposite, performance jumping as much as 18% at the open, the largest increase since March 2024, and it sits on the other side of the AI spectrum today because it is one of CoreWeave's major suppliers and one of the beneficiaries for the hunt for servers. The company said it will generate about $50 billion in server revenue in the current fiscal quarter, and the CEO said it has a record backlog of $43 billion as major AI providers are seeking its servers to run their AI workloads. The company also announced a $10 billion increase in share buybacks, so the market is pleased that it is seeing some of these capitals return to the market. So the fix and shuffle trade is still out there, much like more parts of it is, despite what we've seen with NVIDIA this week.
Netflix.
And Netflix, Paul, this is one for you. Shares are rising after the company was outbid by Paramount Skydance in its bid to acquire Warner Brothers. The company last night said they are declining to raise their $82.7 billion offer for Warner Brothers Studios and streaming business, and investors seem to be happy that they're finally walking away from this deal, which they feared would settle the company with debt and financial risk. It also marks an end to the contentious fight both in Hollywood and in Washington, and Netflix shares have declined 15% since their offer in December. Two yesterday's closed data is posted now that the shares are declining around.
Stock up 8%. Smart move to walk away. I think that's just my opinion. We'll talk to an expert in just a second. Thank you so much for joining us. Tatiana Derry, strategist for Markets Live. For more conversations like this, subscribe to our Stock Movers Report. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. To deeper this little deal there in the media space, Warner Brothers Discovery, again, in the news with being Netflix walking away. So now Paramount Skydance, it's their deal. Good for them. And let's check in with Geetha Ranganath. She covers all the media stocks for Bloomberg Intelligence. Geetha, we got Netflix stock trading high. I guess the shareholders like them kind of passing on this deal.
Yeah, big relief rally, Paul. This was always kind of muddying the narrative. I mean, we've spoken about this multiple times. Netflix is such a clean, organic growth story, and then just pursuing Warner Brothers Discovery, just kind of added so much of uncertainty. You have the regulatory risks, of course, integration, execution risks. Plus, we were talking about something like, their debt levels going up to beyond $100 billion. And yes, they do have the financial firepower, but at the end of the day, they have always been builders versus buyers. And once again, they showed, that they deserve, they always gained this reputation of being very, very disciplined spenders when it comes to M&A, and I think it once again exercised that discipline, and then investors are cheering.
So it seems that this is a smart move, according to analysts, including you. Does this signal that the company is confident in its organic growth versus M&A, especially in a very crowded streaming market?
Yeah, Isabel, that had, been the question. I think that's what spooked investors so much when they actually went ahead with this $83 billion deal for Warner about whether they were actually seeing a slowdown internally, and them not just abandoning the deal, but also going ahead and resuming buybacks. Once again, just kind of signals confidence in their underlying growth model. So I think, we know very well that their operating metrics are really strong. I mean, this is a company that has guided to double-digit revenue growth. We're going to see about 12 to 14% revenue gains this year. We're looking at operating margin expansion of almost 1,000 basis points. It's gone up 10% over the past 2 years. So, and of course, we also have fabulous, free cash flow generation. So, all of their, financial levers and all of their growth drivers very much in place. And, not having this distraction anymore just helps them kind of really double down on their organic growth story.
On the other side of the equation, Geetha, be careful what you wish for. So Paramount, they've got this great asset, Warner Brothers Discovery. What's the street think about this management team at Paramount? Pretty much unknown, untested. This Mr. Ellison from the media community. Is there any report made? Do we think, does the market think this is a management team that can make this acquisition work?
They probably can, Paul. I mean, they do have, financial, they do have some financial firepower here. Although I would point out that leverage at this company is going to be extraordinarily high. We're looking at pro forma leverage of around almost 7 times. So those are, dangerously high levels. Yeah, and it's something that they're going to have to contend with. But at the same time, they've spoken to synergies. We're looking at about $6 billion in synergies that they've committed to. And remember, this is a team with a fairly tech-heavy bent. So that might be something that kind of really serves them well as they poise themselves for this new streaming future. You do have now, they kind of are turbocharging their content offering, they're turbocharging their streaming business, and they have all of the pieces in place to make this a really good business. We'll have to wait and see how they execute. But you're right. I mean,
so we broke even on our first buy entry here. Came back to, it swung back to value area and then pushed up. We a second entry on the long here. We exited prematurely, but still a green day. Should have held to. I would have hit the top profit target here. We would have hit the target, but looks like it's rotating back to value area. This is the daily value. Here is the weekly POC. Here's our delta strength.
Building on that competitive moat that they already have. And now, the icing on the cake for them with this Warner deal is that they're getting $2.8 billion in termination fees. So, hey, much more cake around us, I guess.
Exactly. Geetha, thank you so much. Appreciate that. Geetha Ranganathan, media analyst for Bloomberg Intelligence. But we talk synergies in Hollywood. I'd be very nervous. This means jobs. If I'm a lighting director sitting on the Warner Brothers lot, I look across the street at the Paramount lot, there's somebody doing my exact same job there.
That is true, but at least that's something AI still can take. I mean, with news earlier this morning, Jack Dorsey's block cutting and stuff, that was scary, and I always fear about us. This is why I keep baking. I know it's big, and I was just telling John that I'm also into flower arrangements.
Oh, okay. I mean, I like baking too, to eat it. So far, I have not seen any of the products of these bills.
Yes, that's a good point, John. I mean, that's a good point. We still have to see if we can work on that a little bit here. Sell continues here. We got the Dow off 690 points, 1.4%. That's leading the way on a percentage basis. The S&P is off 50 points, 0.75% decline. The Nasdaq is now 205 points, so about 0.9 of 1%.
PPI was higher than previous.
Intraday lows. Also call out the 10-year Treasury. We're now below 4%. It's been a long time since we've been below 4%. 3.97% on that. Gold higher.
It's like we're rotating back. we can stay above value area. We can continue up to seek this. Well, there's plenty of liquidity up here. 115 contracts resting at some passive orders here. 82 level. Where are we at? Hmm. 20 contracts there. See if they can go for that.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Simon, the Bloomberg News with this Bloomberg Business Flash. Kind of toxic groove worry out there. You know, shares of big banks listed there, and also the asset managers, they are tumbling. So you're concerned about artificial intelligence disrupting them, and then credit concerns are raging out. There's another cockroach with London's MMS. And you know, shares, let's pick on Apollo Global Management right now. They are down close to 7%, ticker symbol APO, Apollo Management. Netflix, they won by losing. You're need to talk about it. Shares of the streaming giant right now, they are up over 8% and dropping a bit to buy Robert Lee's Discovery, so it's considered a risk for investors. They were worried Netflix would overpay. And don't forget, they're still going to get a $28 billion break-even fee. Best performing stock in the S&P 500 right now, Technologies. They are up, almost at 18%. The company delivering an outlook for sales of its artificial intelligence servers that exceeded estimates. S&P 500 down 50 points, 68.58 on the index. The Dow down 680 points. The Nasdaq 119 points lower. To the rise of robots pitting Hyundai's Atlas against Tesla's Optimus. While the world's attention is focused on Elon Musk's promise offering, Hyundai is actually emerging as the leader in the industry. They stole the show recently with the Atlas humanoid robot at the CES in Las Vegas. Do all sorts of things. We check the markets for you all day long, right here on Bloomberg Radio. John Tucker, that's your Bloomberg Business Flash. Isabella Fall.
All right, John Tucker, thank you so much. We appreciate that. As always, we had Isabella sitting in for Scarlett, who I'm also streaming live here on our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So these markets, so you can do that with Nami Lavelle, Senior U.S. Equity Strategist, Management Business at UBS. Nami, what's the type of conversation you're having with your clients these days as we see kind of volatility pick up here in 2026?
I love that question because what we have really been focusing with our clients is the importance of diversification and rebalancing and really managing concentrated stock positions. And the reason being is that a lot of clients have benefited from extraordinary.
Another divergence here in ES and NQ. NQ has already taken this high, and ES is lagging here.
Opportunities in the market, you know, the AI disruption, headlines have been so clear
I mean,
in the market, but it's really clouded the headlines,
really,
the positive environment that we're in from an economic standpoint. We really think that this is an economy that's going to grow 3% in the first half of the year, and that should be very supportive to some of the more cyclical areas of the market as well. And so overall, I would say, Paul, I really remain constructive on markets, but it's about really right-sizing some of those positions that might have gotten out of whack over the last few years.
And you recently downgraded tech and communication services to neutral. Is it about valuations, AI capex running a little too hot, or just rising competition in the space?
There's a lot of great questions, you know. Yeah, you know, I think that the downgrades from neutral after years of being quite bullish on the space, I think, you know, look at NVIDIA, how it behaved this week. I think that's really reflective of the struggle in the sector, you know. NVIDIA had exceptional earnings, beat and raised, but, you know, it did not resolve the issues that the market has had around AI. It's no longer about whether AI spending is strong enough. It's really about how disruptive and capital intensive AI is becoming. You know, NVIDIA is capturing a lot of the cash flows, but the hyperscalers that are supporting that AI is seeing cash flows come under pressure, particularly after massive capex that's expected to be spent this year, $650 billion from the five largest hyperscalers in the space, and that's nearly 100% of their operating cash flow. And so within the space, we want to become more selective. We're really focusing on those areas within tech, so it's not negative on tech, it's just being more targeted. Focusing on those areas that have, you know, supply chains bottlenecks, think about memory, foundry, as well as packaging, and then within software, we're really focused on more of those structural software, so those that are embedded in an enterprise and really at the plumbing, and it's really hard to displace rather than application software. So it's not an overall negative view on this tech. Again, it goes back to the right size and position message that we have out the clients.
Now, how about in the bond market? What's that discussion with your clients like these days? I mean, some nice coupons out there. I'm not sure we're going to get much, principal gain pick up here, but certainly the coupons are pretty strong.
Yeah, you know, we continue to emphasize that message of staying up in quality within the bond market. We think that, yes, you can put your coupon, you don't know how much price appreciation you're going to see at this level, but overall, it's that continuing quality story that you want to really stick to and be very selective in that area as well.
And you expect 2 rate cuts this year. Do you look at that as insurance against a slowdown, or maybe a green light for stocks to push higher?
I would say not even a question of slowdown, it's more a reflection of that we think that inflation will start to moderate in the back half of the year. We know that the Fed still remains quite data dependent, but there are quite a bit of inflation costs on the Federal Reserve. And so once inflation starts to moderate in the back half, we think that it will give the Fed the license to start to cut and looking for that 2 rate cut in the back half of the year. But overall, the Fed bias remains dovish. Even if that cut is delayed. And so we'll watch payrolls next week to see how strong those numbers are. Obviously, the January payroll numbers were quite strong, but ticked down in the unemployment rate to 4.6%. And, you know, initial jobless things that yesterday remained well behaved. And so if the Fed is to cut near term, it will be a signal that there's some weakness in the labor market, but we think that those cuts comes in the back half of the year and more driven by lower inflation.
Nadia, thanks so much for joining us. Really appreciate it. Nadia Lawal. She is Senior U.S. Equity Strategist, Global Wealth Management at UBS in New York. All right, more just monster numbers being thrown about in this AI game. OpenAI raised $110 billion in new investment at a $730 million pre-money valuation. Extraordinary amounts of money being raised. All the big names are involved here. I need a little help, y'all. A little help here. Caroline, hi. Beat Tech Coin for joins us here in our Bloomberg Interactive Broker Studio. The hits keep coming, Caroline. I mean, the investments keep coming from big names we all know. What do you make of it?
It makes for an interesting relationship with OpenAI and Microsoft going forward, because this is Amazon coming in, which already has a very strong relationship with Alphabet. And we've seen a lot of crossover of big strategic investors and venture capitalists and putting money into both key frontier labs. What's interesting in this agreement is not only the whopping scale of money, $50 billion is going to be coming from Amazon. Now, we don't quite know if that is to account for actually whether it's more in cloud costs that just get sucked up by Amazon instead, or indeed whether it's GPUs and chips. But we also think that 30 billion coming from NVIDIA, so the deepening tide continues there, and clearly therefore some GPUs from NVIDIA are going to be intertwined in OpenAI compute needs, as well as Amazon's own trillion chips and the like. But we're also seeing, well, as well as Matthew Sun being a big player in all of this, Microsoft being less of a player. And remember, OpenAI first got a big chunk of change from Microsoft. Microsoft was the key backer of the company, had exclusive rights to a lot of OpenAI's technology within the Azure platform. Well, now, the frontier offering coming from OpenAI, that's basically the new offering to help build agents, which is all anyone can talk about at the moment, that's going to be exclusive on AWS. Oh, wow. So all of this is just an interesting rearrangement of technology partners and just how people are deepening their ties.
I like your word rearrangement because we have OpenAI CEO Sam Altman saying that he doesn't think his company's fundraising is looking for circular as long as revenue keeps going. And I feel like this is a conversation we've been having. It's like the self-funding loop, and is it risky? But he's saying it's not circular.
Well, NVIDIA's had to try and prove this point time and time again. NVIDIA has been putting money into near-net clouds like CoreWeave, which had its numbers today, putting money into the likes of an Anthropic and an OpenAI, which ultimately all want chips from NVIDIA. But many would say, look, it's not just circular financing, it's actually strategic financing, because how better to understand how your technology works best is if you partner this closely and you can understand the way in which your GPUs, your CPUs will be used in the future. So for the cynics among us, yes, it looks like the same big players are all moving money from one place to the other within each other. But for perhaps the more practical is that who else has the cash pile to be able to continue to build the flywheel effect of generative AI here at the moment, and OpenAI
Okay,
has
well,
an enormous amount of compute needs. That's what they keep saying time and time again.
we got 2 trades in this morning, right at the New York Open after the PPI news. Happy trading and good Friday. See you next week.